Hello everybody. Another week's gone by and it's been a week dominated by two main topics. We've had in the US the Federal Reserve's Finance Policy Committee meeting, which happened yesterday on Wednesday, and today we'll have in the UK the Bank of England meeting. So starting with what happened yesterday in the US, we've had the announcement of a rate cut. It's a rate cut of 25 basis points. And this rate cut has been pretty much baked into the price of the dollar for quite a while. Everybody's been expecting it. There's been some discussions in the past whether it was going to be a 25 basis points or a 50 basis points. Towards the end of this discussion, as the date of the meeting approached, the consensus pretty much settled on 25, and that's what we had. So paradoxically, following this announcement of a rate cut, the dollar gained in strength. So the dollar is now trading at the highest of the last 2 years, over 2 years highs for the dollar following the announcement of a rate cut. So this is a massive paradox, but it's actually quite easy to explain why it happened. So the main reason lies in the tone and on what the Federal Reserve's Chairman Jerome Powell said in the speech that followed this announcement. Basically, Mr. Powell sent out a few conflicting messages. So on one hand, he started by saying that this is a mid-cycle correction, meaning that we will have a cut now, but it's quite likely that we will have more hikes further along in the cycle. And then he sort of changed direction and said that yes, we will keep looking at what happens. There's underlying risks for the growth of the economy, namely coming from increased tensions in the trading sphere between the US and China. And this is likely to pose a challenge to the growth of the global economy and the US economy. And if necessary, there will be more cuts. So conflicting messages here, but what we should take from what he said is mainly the fact that it was less dovish than what most people expected. Most people were expecting Jerome Powell to be more defensive in the way he approached the issue. He was not. It made it sound like this is just a small correction. There may be more hikes along the way, and therefore the markets reacted accordingly. So the doves out there that were expecting more cuts were disappointed. People started buying dollars, and the price of the currency has been going up against a basket of other currencies. So moving on to what's happening in the UK. Well, it's been an interesting week, an interesting month, an interesting year. In fact, since June 2016, there's been so many points of interest. It has been almost like a saga that everybody's been following. The latest chapter, of course, started with the appointment of Boris Johnson as Prime Minister. He appointed a number of ministers for his cabinet. It's a cabinet pretty much focused on dealing with a hard Brexit, which is seen by the markets as the worst possible outcome for the current situation, and therefore the pound is suffering. Now, the big question mark is what will Mark Carney say at the end of today's meeting. It's pretty much taken for granted there will be no changes in the current interest rate of 0.75%, but the tone of what Mark Carney will say will dictate the behavior of the pound, and we will see. Should he be defensive, we can expect even more losses for sterling. This is all for this week, and I'll see you again soon.